This is CFD Trading Insights. I'm Mark Loughty. City Index's Alex Douglas is here for a look at what else we can use CFDs for. Ordinarily, people tend to think of CFDs as a trading tool to make money, but are there any other functions that CFDs have which investors and traders may be able to use in their portfolios?
Yes, absolutely. And as you say quite rightly, a lot of people do think of CFDs as a tool for speculation. But beyond that, you can use CFDs to protect the value of your physical investments as well. If we have a look at this chart here of a particular stock involved in the commodities industry, we can see it had a very strong rally here, rising from a price of $10.90 to $20.62, around about 89% rally in the space of just over 3 months. So it had a very strong move. Now, let's suppose you'd been watching this down at the left-hand side here, down in the early days of the rally. We won't say that you bought it at $10.90, but let's suppose you'd been watching things develop, you saw it break out, and you bought some at $12.62 in the physical market. Let's suppose you bought 500 of these shares at $12.62, so you put in $6,310. By the time the market got to the top here at $20.62, the value of your portfolio had grown to $10,310. Now, you may have noticed over the last month or so that this upward trend was losing momentum and prices were starting to track sideways. This is often a precursor to a bit of a correction in prices, especially after a large rally. So if you're holding these shares as a physical asset, you may be getting a little bit concerned that perhaps you're shortly going to be giving back some of the profits that you've achieved. So what we might do is have a look at the chart, determine a line in the sand below which we don't want to lose any more money.
Right.
In this instance, let's suppose we've set that level at $18.32. Now, if prices were to drop back to $18.32, then the value of the portfolio would be back at $9,160, which is still quite a healthy return from the initial $6,310 that we put in. So we've drawn our line in the sand here at $18.32. We watch the market for a few more days, and then it comes down and hits our level here at $18.32. Now, traditionally, what people have done at this point is to sell their physical shares. But there could be a number of reasons why you can't do that. Maybe you own the shares in partnership with somebody else. Maybe if you were to sell the shares, you would be realizing a large gain, which may be taxable, and you may not be wishing to pay that tax just yet. There could be any number of reasons why you don't want to actually sell the physical asset. So rather than do that, what you can do is sell an equal number of CFDs. So we've got 500 physical shares. When the prices drop down to our line in the sand, we sell an equal number of CFDs. In this case, we're going to sell 500 of them. And then, as we watch the market over the coming days, prices continue to fall further, dropping right back below $15 here. Now, at this point, the last point here on the chart, the prices are showing at $14.97.50. At that level, our physical portfolio has dropped $1,672.50 from that line in the sand that we drew.
Right.
So our physical portfolio has lost money. But because we sold an equal number of CFDs, we've actually been making money on the short CFD position. And in fact, we've made the same amount. And in fact, because we're trading CFDs and we're earning a little bit of financing benefit on the short position, it's a small amount, admittedly, but there will actually be a little bit of financing benefit, which means that the CFD position is actually returning slightly more than you've lost on the physical trade. So you are actually coming out slightly in front here. Now, effectively what we've done by selling the CFDs is we've placed a floor under the value of our combined portfolio at that line in the sand, in this case at $18.32. So as long as we're holding that short CFD position to counteract or in balance to our long physical position, it really doesn't matter how far the physical shares fall, because every dollar we lose on the physical shares will be offset by a dollar profit on the CFD. Of course, one of the keys that you must remember is if prices do start to rally again, you need to close out the CFD position at some point, or else every dollar you make on your physical shares will be offset by a dollar lost on the CFDs. Ideally, what you'd want to do is once you start detecting that this downward trend is coming to an end and prices are starting to turn higher, if you close out your CFD position by buying it back again, you will potentially achieve a bit of a profit on your CFD trade. If you're still holding your physical shares, hopefully they will indeed return above your line in the sand and the underlying upward trend resumes. You'll still have the physical shares, and hopefully they'll go on to make more profits for you. And in the interim, you've managed to pull out an extra little profit on the CFD trade, effectively giving you 2 bites at the cherry without having any additional risk. So it can be a very effective way to protect physical investments.
2 questions. The first is, why not just place a stop-loss order in the equities market?
Well, again, you may be in a position where you don't want to actually realise any profits that you've got, on paper, on the physical asset.
That was going to be my second question. What sort of reasons might that be?
Well, there could be taxation reasons. If you achieve a large capital gain, you may be required to pay tax on that capital gain, depending on the country in which you pay tax. So that is definitely one consideration. You may, as I mentioned earlier, you may also own the shares in partnership. They may be held in escrow. There could be any number of reasons why you don't want to or you cannot sell those shares. But you can still protect yourself against the risk of those shares falling in value by placing a short trade in the CFD market.
Thank you very much, Alex Douglas. And you can interact with us through this website. Click Apply for a demo account to try the City Index platform risk-free and discover the features of the live account. Or click here if you want to jump right in and apply for a live account straight away. To learn more about CFDs, download the 10 Golden Rules of CFD Trading by clicking here, or ask us any question you like about CFDs through this form.
You should read and consider the PDS before making any decision to deal in City Index products, which are derivatives. Derivatives can be highly leveraged, they can carry a high level of risk and are not suitable for all investors.